What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie, Ben and Charlie with you today, giving you the wrap-up of what's been happening this week. Big week this week, but it was Australia Day, so technically a shorter one, but lots of news happening nonetheless. How was your Australia Day, Ben?
Pretty low key, but it's the last little short week, I guess, for a little while. So
Well, yeah. I actually don't even know when the next holidays is. August for
April
for Easter.
yeah. So really feeling like we're getting back into it now.
Back into it, people back on the ground. How about you, Charlie? Have a nice Australia Day?
Yeah, it was good. Had some socialising, which was nice. Saw some people I hadn't seen in a while and tried to make the most out of the long weekend.
Yep.
Although, like you said, it hasn't really felt like a short week with the amount of
news
headlines
coming
and news
out.
that we're processing. So, it was good. It was good to have a break.
Yeah, I went down to Melbourne for Australia Day for the Australian Open, which was really good fun. It was my first time going to the tennis in Melbourne, and it was so good. But I was also there on Tuesday for that boiling hot day, 46 degrees.
And the haze as well, the smoke.
And the smoke on Monday, it was intense.
I bet.
I was complaining for the brief amount of time that I spent in the sun, just thinking this poor tennis player is actually having to play in this, even though all the courts were kind of covered and air conditioned.
They still got to grit it out in that heat, which is absolutely brutal.
Yeah, absolutely brutal. But when I came back, there was lots to write about. And I think this week, as is typically the case after Australia Day, everyone starts doing things and everyone's like rushing to make up for the lost time at the holidays. And this week we've had several big announcements coming through, including a couple of ones about the mergers, which we've been following for literally about 5 years now in the mutual banking space. Probably longer, actually. But there have been a whole swathe of mergers that were announced pretty much from 2023 onwards. There were a whole bunch of them. And some of the big ones over the years have included, the Heritage Bank and People's Choice. Yes, People's Choice merger, which created People's First. There's been, Teachers Mutual Bank has over the years been absorbing some of the smaller players increasingly. But we had two merger announcements this week. One unsuccessful and one successful.
But yeah, I think it's like this sort of theme we've talked about quite a lot, at least in my time at the advisor, sort of these entities looking to consolidate and sort of get a little bit of scale to make things like marketing and technology and regulatory obligations a little bit easier.
Yeah.
But yeah, as we've seen, sometimes it works, sometimes it doesn't.
Sometimes it works, sometimes it doesn't.
Yeah.
So if you recall back in, I think it was 2020, APRA put out loads of statements being like mutual banks are going to have to merge because they're not keeping up with the technology expectations of their customers.
Yeah.
But also the compliance burden is, pretty expensive, like paying for lawyers to do everything is quite expensive, paying for all of the cybersecurity that you need to have nowadays.
Yeah.
So I think they were like, these players are not going to survive if they're not consolidating. So we have seen them consolidating. And this morning even.
Fresh off the press,
Beyond Bank confirming that it was pushing ahead with its merger with Family First Bank. So the members of Family First Bank had their special meeting last night, on Thursday night, to vote on the proposed merger.
Yep.
Family First, I have to admit, I had to look up because I was like, I've never heard of this lender before. But Beyond Bank, obviously I have. So they have decided to merge now. It was 89.6% in favour.
Wow.
So pretty much like overwhelmingly in
Quite
favour
emphatic.
of the vote. And now looking to merge from the 1st of March.
Yeah, so there's a few hoops they have to jump through, right? They have to get regulator approval and member approval, and there's a shareholder vote as well if they're listed.
If they're listed, yes. So I think there's obviously for the credit unions or the customer-owned ones, they have to get their members who own them to vote on it, and then if they're listed or if they're, I think generally over a certain size, they have to get regulatory approval as well. And I think Beyond Bank is, so which is why they have to get regulatory approval. So basically they're saying all the final approval documentation has now been lodged with everyone. Yeah. They just need to go through the rest of the sign off. And I don't think there's many occasions, if any, that I can recall where we've seen the regulator be like, no, you can't compete, you can't merge unless it's a competition issue. So you might remember the ANZ Suncorp merger that had a lot of rigmarole. We're covering that because they were originally like, no, you can't merge, and they did merge, and they had to go through tribunal and get it appealed. So it was a whole thing. But I think generally, if it's going to APRA or the Treasury, it's kind of just a tick box exercise, I think, most of the time, or at least it's seen that way. But yeah, so now they're going to be merging. Beyond Bank will be subsuming Family First Bank, and that will basically mean that they've got a bit more presence in New South Wales. It's a New South Wales based bank. So they've got Blue Mountains, Lithgow, Bathurst, Blackheath, and Mudgee. Lovely areas.
Wow.
And so that will be really providing the Beyond Bank with a bit more of presence in those areas. I think it's only like marginally bumping up its loan book size. I think they're going from 11.5 billion to 11.3 billion, so fairly small loan book, or at least assets under management. And then I think from a Family First member's perspective, part of the attraction is that they can access all the Beyond Bank branches, which are obviously many, many more than they have. They can access all the technology, all the products. So it kind of gives them a lot more options to be part of a bigger group. I also was looking at the fact that both CEOs are called Marshall. I wonder if they're related. Maybe they're brothers. So David Marshall, CEO of Beyond Bank Australia, and Adam Marshall, the CEO of Family First Bank, they were both talking, basically being like, we both have long histories of serving our communities. We have a lot of cultural fits. All of, what we want to do pressing forward will kind of marry together. They did say that all the employees as well at Family First Bank will be moving over to Beyond Bank. So that's pretty good. And then I think from Family First, the CEO there was saying this really makes sure that we can receive, our members can receive the kind of service they want and can get the products they want. But what is interesting is that this week it was Beyond Bank talking about the successful merger. And if you remember back in 2024, they had tried to merge with Police and Nurses Limited, P&L, but that ended up falling through. But P&L this week has also announced an update on its merger moves with another lender.
So basically we found out that Police and Nurses Limited, P&L Bank, has concluded merger discussions with Great Southern Bank, and the merger will not proceed. Both P&L and the GSB boards found that progressing with the merge would not be in the best interest of its members. So that's kind of put the kibosh on that. The proposed deal would have formed one of Australia's biggest customer-owned banks, with total assets around 30 billion, and they would have had a big exposure across the country, but couldn't get this one off the line.
No, and it's a shame because PNN has had such a great run the last couple of years. I mean, its financial results last year were pretty good, pretty strong. They've been doing a lot in the broker channel. We know brokers love them. But they've been doing really well. So it's a shame that this is the second merger they've gone through. They've gone through the talks that isn't going to be pushing through. Yeah,
and one of the things, I think we were chatting about this the other day, but they put out near identical statements in terms of when they were sort of announcing this to the market. And both sort of lenders said after careful consideration and a robust process, the boards have determined that it's not in the best interest of their customers. So.
Yes, we did try and get some more information, but obviously because it's confidential, they won't disclose it. But we tried. But I think it's really interesting and particularly interesting that the statements were identical, apart from insert bank name here. Identical statements, because usually we see one party saying, it's not in the best interest of our customers because they've seen something on the other side. But this time it was both of them saying it in identical statements. So it's pretty hard to read between the lines there. Yeah,
I mean, I guess it's good that they're making a decision in the best interests of their customers. But it'd be interesting to see why. But, we may never know.
We'll never know. Well, hopefully we will. But I think talking to, Great Southern Bank as well, it's a really big bank already, and both of them very successful in their own right. So I don't think they'll have any issues, continuing on business as usual. It's just more particularly looking to compete. How do they continue doing that if they're not merging?
Yeah, I'm not an expert in what it takes to merge two banks or to acquire for one bank to acquire another, but I imagine it's probably not easy. So
it's probably a lot of due diligence.
Yeah, you have to really make sure you really want to do it, I suppose, before you sort of press the button.
Yeah. And Charlie, for you, when you kind of look at all the sort of merger talk in the space, in the mutual space, do you think there's going to be any more coming up? Can you see any more on the horizon?
Well, it seems like a clear trend, and I think it's going to keep progressing. Although it's not a definitive thing. you guys just talked about it, they're not a foregone conclusion either to succeed. Who knows, there might have been complications, or it might have been an arduous process.
Well, I think it's going to be interesting to see if PNN does explore another one, because with 2 failed merger talk attempts, I think there'll be some people are thinking, well, maybe there's something under the hood there that people aren't liking. So I don't know. Maybe they'll go another time. Maybe they'll be like, that's it. We're just happy as we are.
Third time lucky.
Third time lucky, perhaps. Talking about, though, going through all the kind of changes and seeing lots of things evolving, we have also seen, and we talked about it a lot recently on the podcast, lots of changes in how people are promoting and talking about themselves on social media. We've seen the rise of finfluencers and concerns from the regulators around what people are saying and doing on social media when they're advertising financial products or services. And this week we'd heard from the MFAA, the Mortgage and Finance Association of Australia, who put out a guide for their broker members, looking at how can you kind of manage risks when you're talking to clients, and really looking at, well, what can you be doing? How can you be improving the compliance around marketing and advertising when you're particularly on social media? And this has been a point of focus because of the ASIC consultation that took place pretty much over the holidays. They launched it at the end of November and it ran until, I think, like mid-January. It's like, that's a really mean time to run a consultation. But they consulted on the update to their regulatory guide for advertising financial products and credit and financial products. And in that guide, they actually put forward several examples of things that they'd either taken action on before from brokers or that they didn't like the look of, as well as from other sides of the financial system as well. And some of those included things like, saying they were talking about a broker who'd been advertising something on social saying, they could help clients be debt-free. And they were saying, well, actually what they were doing was consolidating debt or, changing their repayment structure. So they're not debt free. It's kind of misleading. So they don't like that. They also were saying they don't like people necessarily advertising the fact that brokers advertising the fact that they have, 40 lenders, or they consider 40 lenders. They were like, really, they might only consider 1 or 2. Yep. Now, this has got the MFAA questioning the wording on that, saying that's probably not right. Like, brokers do consider a lot more than 1 or 2, so we'd like you to change that language. There was actually a range of, I think 9 recommendations the MFAA put forward to ASIC to try and update that guide, which was pretty interesting. So if you haven't read that story, I would definitely recommend you go and check it out, because there's also very important information that the brokers need to know around what they can and cannot do when it comes to advertising.
There's a lot to it. And it's pretty crucial as well, like knowing what to say on social media and not, putting a foot in it or something that's going to get you in serious trouble.
Not losing a license,
No, it's definitely not worth it. And maybe something that brokers aren't completely aware of either, like they're doing unknowingly, and then they're going to get into trouble after the fact as well, which is probably why the MFAA has been so forthright in their response here to clear any ambiguity to it.
In particular, like when we're saying some of the dicey areas can be something as simple as word choice and that kind of thing, where there's no malicious intent. It's just a clumsy way of phrasing something.
And especially on socials where, you've got like such a short amount of time or like, if you're on X, you've only got a certain amount of characters. Like it can be very hard to make sure that you're not hiding anything that is really pertinent. Like we know that you need to have a TMD, for example, for financial products, but you're not going to fit that out on a Twitter on a tweet. What is an X now? I don't even know what the verb is. On an X.
And you've got limits to captions and posts as well. So, how are you meeting regulatory guidelines and maintaining best practice whilst you've got limitations on social media?
So maybe, obviously not saying don't do it at all. Like you're still gonna have to be on socials, but I think just making sure that you're really abiding by the guides. Plus, bear in mind that when ASIC last updated, I think this guidance, social media wasn't really a thing, or at least not the same way it is now. So they're like, we need to update this because
quite a long time ago, wasn't it? 2011, 2012,
2012, I think.
A long time.
So it's sort of been like things have changed over the last 13 years?
Yeah, I thought some of the MFAA's recommendations for the consultation were good. And I think particularly from the perspective of a consumer who might not have the same knowledge of the industry. Things like, differentiating between a mortgage and a finance broker. Reflecting sort of, as we said before, the number of lenders a broker has access to, and those kind of nuances that help them better unpack, I suppose, what the broker is bringing to the table.
Yeah, because I think one of the things they were talking about as well is saying, ASIC was worried about people using the word best. And of course, like we know already, there's lots of rules around whether you can say it's the best loan for you. But the MFAA was saying, well, remember, brokers have a best interest duty. So in some circumstances, it might actually be that they can use the word best. So kind of being like, can we make sure that we're not unfairly creating unintended consequences where we're kind of penalizing people when they do actually have a best interest. Like if someone says this is in your best interest, well,
it's industry terminology.
Yeah, it's industry terminology, and they
practice.
are already held to that obligation.
Exactly.
So it's kind of like
there's contradictions and
good on the
crossovers.
MFAA for taking the time to put forward a submission and actually being like, this is some language we think that could be better.
Very much so.
And they've, as we sort of said, have put out a guide now on their broker portal to help brokers sort of navigate this while we wait for the updated guidance, which I think will be released later in a couple of months.
Yep.
We'll take a quick break here. When we come back, we'll be talking about AMP. Now, we teased this last week, when we were saying that AMP were potentially doing something interesting. And then on Monday, they announced what it was. So we'll be delving into that just after this message. So AMP on Australia Day, of all days, as well as the Australia Day honours being announced, which was quite interesting. There are a couple of former bankers that were named in the honours list. On Australia Day as well, AMP announced that it was re-entering the SMSF space. Now, as we know, SMSF and trust lending has been a real focus point for a lot of lenders recently. But this is really interesting to see a bank coming back in to the SMSF space. Now, they have a product called Super Edge, which they pulled in 2018 when many of the banks started pulling back from SMSFs. And they've brought it back, reinvigorated, resurrected the Super Edge product. Now, this is just for resi property, so residential SMSF loans, not for commercial stuff. AMP doesn't really do that much commercial. If any, actually. So looking at bringing this back, and they were basically saying, times have changed. We want to make sure that we're doing things for our customers, and increasingly they're really focusing on that pre-retiree and retiree customer base, being like, we really want to make sure that those customers have the products they need. We think that lots of people are buying property in their SMSF, and we've seen that. I think, Ben, you wrote a feature for The Advisor recently talking about the uptick in SMSF numbers. And they were like, this product will help them do it. So a bank now writing SMSF loans. I think they're second bank to do SMSF products. BOQ does one as well, but they don't have an offset. This one does. So I think the way they're talking about it's been like, we think we're pretty much the only bank with a true offset SMSF loan.
And is it a similar product to what they had in 2018? Or
yeah, pretty
much the same thing.
Pretty much the same. I mean, I haven't read the credit policy from the one from 2018, but as far as I'm aware, it's the same name and it looks like the same sort of policy. I think there might be some tweaks to the LVRs.
Yeah.
Because I think this only goes up to, let me double check, is it 80%? Might be 70%. Yeah, 80%. So it goes up to 80% LVR. And it's for properties valued between 300 grand and 2.5 million.
Yep.
I have a feeling that Super Edge in 2018 went up higher. I'm not confident on that.
You can take that on us.
Don't hold me to it. But yeah, so this is really interesting. And I talked to Sean O'Malley, who's the group executive for AMP Bank, and he was basically being like, we're trying to be more innovative. We're trying to do things differently. We're trying to bring in new product innovation. And of course, we're trying to do it with brokers. So they're currently now in a broker pilot. They also have a pilot with their home loan specialist as well. They said the first loan had already settled through it. And so far, feedback been pretty good. What do you guys think about banks coming back into the SMSF space?
I mean, it's a super interesting time for this category. We've reported on it quite a bit, particularly towards the end of last year when we saw sort of Macquarie pullback from the space. And then we saw a couple of majors tighten their eligibility and sort of tweak their policy. So they're only kind of dealing with existing customers, CBA and ANZ, I think. Those are the ones.
Yeah, CBA and ANZ.
So it's a super interesting time. I guess, reading between the lines, it's possibly sort of an interesting position the majors have in terms of service, because these loans are quite complex, right?
Well, yes and no.
Yeah.
Some might say they're easier,
Yeah.
but they do require, because you need to look at things like how the trust is set up and like doing all the kind of LRBA types, like bare trust like checks.
Yeah.
So I think that's slightly different, like cross-referencing with ATO data. But generally you're not having to then, I guess, interrogate the individual borrower in the same way. So yeah.
I guess there are
things,
some
yeah.
concerns about the way these structures and products have been used, I suppose.
Yeah, I think generally a lot of the concerns from some of the banks that have been pulling back has been like, is this a true... Are you basically setting up an SMSF for the right reasons?
Yeah.
Like you're not just trying to get around
Circumvent
serviceability.
serviceability, yeah.
So they were basically saying, there's going to be a lot still of documentation checks and validations of documents to make sure that everything is sort of good and ready to go. But really interesting to see this bank coming back. And as we said, with an offset account that will be tied to the SMSF product, which is pretty interesting. And yeah, looking at helping create more cash flow and opportunities for those with SMSFs.
Yeah, and I mean, a lot of the non-banks are still quite active and still very willing to sort of work in this space as well. So
yeah, and
I think
particularly
if you need a SMSF loan, you'll be able to find the one.
Yeah.
But yeah, it is interesting to sort of see how this segment is evolving.
Yeah, and that's not the only thing we had from the big news from the banks this week. After the holidays, we had some appointment changes coming through too, didn't we, Charlie?
We did. So the most major of those appointments this week was Bank of Queensland announcing the appointment of a new CEO. And that is an internal senior executive that they've appointed. Rod Finch is going to be the next CEO and MD effective 1 March 2026. And they kind of build it as a planned leadership transition and ensuring stability and someone who's been in the company for about 3 or so years, who has a comprehensive grasp. And as we all know, they've been through a pretty tumultuous couple of years
time. Yeah,
but it was evident in their statement that he's the right pair of hands, and he understands internal policy and practices, and he's pretty popular clearly in the bank as well. So I think it's interesting that they've gone for a steady pair of hands.
Well, I think Patrick Allaway, who is the current CEO, is also a very steady pair of hands, but he was never really meant to be CEO. He was kind of had it thrust upon him a few years back when, you might remember, George Frazis left BOQ, and it went through quite a bit of regulatory scrutiny. It had to go through some enforcement actions, enforcement undertakings. There was a lot of looking at what exactly their sort of compliance looked like, what the AML-CTF looked like. There was a huge amount of scrutiny at BOQ. That led to George Frazis leaving, and Patrick Allaway, who I believe was chair at the time, was asked to step in as CEO. And I think he kind of did it temporarily, and then they made him a permanent CEO. So he was never really, I think, wanting to take on the position necessarily, but he did it, and he's kind of now steered them through this real period of change, because BOQ Group, which also includes MeBank and Virgin Money, has been really shifting what they've been doing. We saw BOQ Group pause resi loans through the broker channel. Was that 2024? Maybe 2025? I think it's 2024. That Virgin Money also stopped taking loans through the broker channel a few years back. So MeBank has really been its main broker bank, I suppose you could say. Obviously, BOQ specialists still working with the broker channel, but so from the 3 brands that it was having in broker, they kind of like have been shifting it through and being like, what is our strategy? Really going through a period of transformation, thinking about what each of the brands are doing. And so, paused BOQ resi loans through the broker channel, really focusing on MeBank. And I think recently also updating its technology. It's had a huge amount of spend going into each of their technology stacks. I think over the last pretty much 5 years, when we've been writing about BOQ results, we've always been looking at what they've been doing, and each of the brands have been updating. I think MeBank this week, I think it was, maybe last week, has started rolling out its new broker portal and onboarding aggregators to use it. So I expect to hear a lot more from MeBank and BOQ Group going forward. But I think because of all the rigmarole, because of all the changes, because of all the drama over the last few years, it kind of makes sense to have someone internal who's been across all of it
For sure.
to step up and take on the CEO position. And who better than someone who is actually already heading up transformation and operations.
That's where it's coming from, Chief Transformation Officer,
kind of
just as you mentioned there.
So kind of being like, taking him to the next level and being like, well, you really know what we've been up to.
Yeah.
Here it is. So he's going to be starting from when? Next month? March.
Finch is Alloway is retiring on the 28th of February, and Rod Finch is stepping into the role on the 1st of March. So in about a month's time. But yeah, as you were saying before, the board really made emphasis to pay tribute to Alloway's leadership and what they described as a, quote, challenging and strategically important period for the bank.
Strategically important. We're going to take a quick break here. When we come back, though, we're going to be looking at what's going to happen next week when we have the February cash rate decision, the first one of 2026.
Yep.
And we'll get into that just after this. We were looking again, I feel like every week now we write a rate story. It used to be towards the closer we got to a monetary policy board decision, the more we wrote about rates. But at the moment, it's pretty much every week writing a story about it because forecasts change so quickly. And yet again this week, forecasts were changing. Charlie, you took this one on for the Advisor.
I did.
Why have they been moving?
Well, it was all to do with the CPI and inflation figures that were released on the 28th of Jan that everyone was keeping an eye on, and the banks were then looking towards CPI and the trimmed figure to see what that was doing as well, which is what the RBA looks to provide it with justification and validation of its decision, and that was released, and inflation has increased from 3.4% to 3.8% in the 12 months to December 2025. But more importantly, that quarterly core inflation, the mean trimmed that they keep an eye on, has dipped to 0.9%. But still, that's
more than people were expecting.
It's still an increase. Yeah, for sure. It dipped 0.1 from 1%, I think, the month prior. But the banks were saying that the banks were all pretty proud of themselves on this because majority of them were tipping a 0.9% result. Well, it was not in the RBA's forecast, but the banks and certainly ANZ was tipping 0.9, and they were basically saying before the data was released that if it was 0.8, then the Reserve Bank would hold. If it was 0.9, the bank would increase by 0.25. Inflation's going up, and the banks seem to think that majority of the banks seem to think that it'll be a once and done kind of thing. They'll hike in Feb, they'll hold, see if that can temper things. Although NAB seems to think they'll go a step further in May as well. What do you guys think?
Yeah, it was really interesting. I think everyone had their eyes on this latest print of inflation data, particularly after what we saw happen to employment.
Yep.
And everyone who's got a mortgage, I think, is sort of it wasn't necessarily good news for them. But I think the RBA thought headline would come in at 3.6.
Yeah.
It was actually just a touch higher.
Higher.
Based on everything the economists have sort of been saying, they've kind of got a path to hike rates if they want to, which doesn't mean they will.
Doesn't mean they will. They might still hold, but I think it's pretty clear now that maybe monetary policy isn't as restrictive as I thought it was because people are still spending quite a bit. There's still a lot of employment. There's still inflation rising.
Yeah.
So they were kind of like, oh, maybe this means that it's not restrictive enough. That would warrant a hike. Maybe in February.
Yeah.
I really don't want one to come in February. But, hey, if you've got loads of savings, then happy days for you.
I know we've said this a few times, but in the space of 6 months, so much can change for the outlook. And we would just, I think, how many rate decreases did we get? We got
Three.
free?
February, May, and August, I think.
And a lot of the times I thought people were pricing in more coming this year, but then everything flipped. And,
I know. I think they were expecting 2 in 2026 at some point.
Yeah.
I want those forecasts back, thanks. But yeah, so I think this is so hard. And I think whenever we talk about this, people are like, why can they not just say what they're going to do? And it's like, because it is so dependent on what is happening. And there's so many things that go into it. So the quarterly data from CPI, even though we knew that was going to be a big one that lots of people were going to be focused on, I am surprised that all 4 major banks now have the same forecast, pretty much, apart from NAB, which is also saying a separate one.
Yeah.
I don't necessarily think, though, that's because the other 3 are not thinking there'll be any more hikes.
No.
I think they're just saying February and then a prolonged period of waiting. I just think a lot of their commentary just doesn't extend out that far, whereas NAB is pretty clear on being like 2.
Yep.
Do we remember who moved first on the hikes? Was it NAB?
CBA,
Oh,
I think.
CBA was the first. Yeah.
I think.
The CBA has held steady at a single hike in February, as I was just saying before. But their statement was quite lengthy, and they basically tried to stress that anything could happen.
They always do, economists.
Yeah, of course. So
anything could happen.
try and keep it as cautious as they can, not to sensationalize and to temper expectations as well. Obviously,
but also they don't know what happens. Like, look at what's happening in like in Greenland and Venezuela. Like, it depends on what happens to the Middle East and what's happening in Iran. Like, there's so much going on.
Yeah, and they said that as well, that there's just a lot more to it than simply spending and jobs and wages and these kind of things as well. You've got a global market that is just increasingly volatile and unpredictable, and they said that the bank will consider all of those over the 2 days when it's deliberating, and what global markets and exchange rates are doing as well.
We should probably say what the rate will be then. So currently it's 3.6%. It's been 3.6 since I think August last year.
Yep.
It will go up potentially 25 basis points if the four major banks are correct to 3.85%.
Yep.
Still though, pretty low historically. We don't want to jinx things, but like that is still not a bad rate to have.
No.
Like, if we look at other central banks in other countries, much, much higher. I think like the UK and America are both up on that. So we're still in a fairly good spot. We shouldn't get too stuck on the fact that it's the first hike in a while.
No.
It will be the first hike since 2020.
November 2023. So long ago now, but it was just proliferating the news cycle as well.
It's hard to keep track. There's currently 8 decisions a year. There were 11. So it's sort of just staying on top of it all.
Yep.
Yeah, and one line Michelle Bullock comes back to quite a bit, and I mean it's hard because you feel sympathy for a mortgage holder and dealing with rate hikes, but inflation is out of control. Inflation is very bad.
Very bad. So
that's what
business.
the RBA is most concerned about.
Yeah, of course. Yeah. So bringing that back down and hopefully making sure that prices don't go too much more crazy, because things are getting expensive. Looking at, if you even just the price of coffee, the price of chocolate at the moment because of the chocolate shortage.
Incredible.
You'd be lucky if you buy a block of chocolate for less than $8 nowadays.
House prices are also steadily increasing.
But yeah,
as well.
I mean,
they don't stop.
Well, that's an exception.
Yeah, exactly.
I'm meaning for everyday goods.
I know, but the bank's made sure to reference that as well. That spending is still up.
It's gone from one end of the gamut of purchases to the other.
Chocolate block or a house.
Exactly. Yeah.
Both of them getting more expensive. Of course, we'll be bringing you all the news on Tuesday when the RBA does announce its monetary policy decision for the month of February. That'll be out at 2:30. We'll obviously be sending you all the news and sending you all the updates. If you've got any thoughts on the rate hikes or not, let us know. You can reach out and let us know. editor@theadvisor.com.au. Of course, take a listen back to previous episodes of What's Making Headlines and all of our interviews with some of the leading brokers in Australia, including on Elite Broker, New Broker, and In Focus. Plus, if you haven't yet already bought your ticket for the Better Business Summit and Better Business Awards, then make sure you do. They're selling fast. The Better Business Summit will start in March and it will travel across the country, 5 states over 5 weeks, with a little break for Easter. And we'll be doing a lot this year on really how you take your brokerage from a mid-sized business to a top brokerage. And we'll be hearing from some amazing speakers over the course of the conference, including SmartMove MD Darren Little, who will talk about how he's built SmartMove into a top 25 brokerage alongside the SmartMove team over at Viridian Financial Group. We'll also be hearing from Maxine Horner, who is a Shark Tank shark and a business empire owner in her own right. She's done a lot of consultations and seen so many businesses over the years talk about how they've been building their business. She's got some great business advice. We're also looking at performance and how you can be leading your company on the best way that you can. We'll be hearing from Drew Arthurson, the COO of Sydney Swans, also with a business angle too. And all of that, plus what the difference is between SEO and GEO, how you can make sure your brokerage is being served up in large language models and AI bots. Really fascinating to see that. And if you're not already across it, you need to make sure you are, because there's a lot going on here very, very quickly. And we'll be unpacking some of the tools and strategies that you can be using to help make sure your business is growing in the right direction. Heaps of really great products, heaps of really great tips. And of course, culminating in the awards in the evening as we crown the best of the best in broking across every state and territory. So do make sure, check out betterbusinesssummit.com.au, betterbusinessawards.com.au, or just theadvisor.com.au to get your tickets. If you are a premium member, you get a free ticket to the Better Business Summit. It's included as part of your premium membership as well. So do make sure you take advantage of that. And we'll see you next week for another episode on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.